What is going on, guys? It is Don from Define Productions here, hardest working nobody in Bitcoin and crypto. It is just me today. Troy is feeling under the weather, so I'm going to make my best attempt to carry this podcast on my own. If you've been watching our podcast for any amount of time, you probably can gather that I can do my fair share of talking. So hopefully, usually I talk 75% of this podcast anyways. I can carry the other 25 the rest of today. So that's what I'm going to attempt to do. So if you're here watching or you're watching the playback, this is either going to go really good or it's going to crash and burn. And, we're all here for it. So let's start with the very first thing that people are probably the most excited to talk about or to hear about, and that is the Bitcoin price. We did hit an all time high this week, and it lasted for literally seconds. We hit 69K 2 days ago for a couple of seconds. And instantly after it hit 69, I was watching it in real time on my computer. It instantly, when it hit 69, it immediately dropped below 68. So it went from 69, like in 32 bucks, down to about 67.8 in seconds. And then proceeded for the next couple of hours to wick all the way down to 59K. So this is what Bitcoin does, boys and girls. This is what you sign up for when you get into Bitcoin. Like, to get this crazy price action that we've gotten for the past couple of months, to go from the literal like high 20s, low 30s, all the way up to the all-time high of 69K, basically doubling the price. In order for that to happen, there's going to be cool-off periods, and typically when we do reach the all-time high, usually we do get between a 15 and 20% pullback. And we got that literally right after, seconds after we got that pullback. So me and Troy talked about it on the podcast, I believe it was last week or the week before, where I said when we were talking about approaching the all-time high or getting close to that all-time high, that I felt pretty strongly that when we hit 69 or we passed the previous all-time high of 69K, that we would see an immediate pullback. I didn't think it was going to be literal seconds. But you could see in order books that there were a lot of sell orders at 69K. So it was going to be a very hard resistance to actually break through, and it was. And there was a cascade of sell orders at 69, which caused the literal seconds of liquidations and that price to go down, and then continuous selling all the way back down to 59K. Because you have to remember, the moment that the all-time high is hit, that is the only time that everybody is 100% in profit, no matter when you bought. I mean, you had to literally buy 69K at that second, and then the seconds later be out of profit when the price dropped. So up until the moment that it hit the all-time high, you have everybody, 100% of participants at their high point and at profit. So there's a lot of profit taking, fiat mindset. People that are just in it for the USD value are going to take their profits, and they did. And we saw that. But we've been seeing the price steady in the 60s. As we are live right now at this moment at 7:46 Eastern Standard Time PM on Wednesday, we're looking at a price of 66,200 on Bitcoin. And we have a total market cap of about 2.49 trillion. And Ethereum is getting very close to 4,000. Earlier today, it was in the mid 3950s. As of right now, it's and I'm doing this for Troy, who's not here to be the Ethereum maxi. 3,851 Ethereum is at right now. We saw a lot of coins moving this week. Solana, right now it's at $133. Dogecoin, it's at 15 cents right now. It's actually up more than any other coin in the top 10. It's up. I'm sorry, I take that back. Shiba Inu actually is up the most in the top 10 because Shiba Inu is coin number 10, and that's up 183% this week, that meme coin. And Dogecoin is up 37.6% on the week. So Bitcoin rips, and shortly thereafter, the altcoins rip as well. Like we always say, Bitcoin is the leader of the party, and all the friends come tagging along after Bitcoin, does its thing. So we hit the all-time high, and a lot of these other tokens are probably going to start making an ascent to their own all-time highs as well. Um, as of right now, Bitcoin is the only coin I believe, at least in the top 20 or 30. I'm not as studied in these other shit coins as my co-host is, but I believe that if you scroll through the top 20 or 30, Bitcoin is the only one that has so far reached this all-time high. Ethereum, I believe, is 4,500 or 4,600 for its all-time high, so it's about $700 away or so at this point. Um, Solana is at 133, and I believe that was like a couple hundred, maybe 300 last cycle. Um, XRP 61 cents, and that was definitely over $1. Same with Cardano. Cardano's at 74 cents. I think that got to $2. Dogecoin was at, like, when Elon went on Saturday Night Live, I believe that was like around 70 cents. So many of these coins have quite a ways to go before they reach anything close to their all-time high. And then, there's going to be a lot of these coins that are going to go past their all-time high. They're going to 2 or 3x, 4x, 5x potentially the all-time high they had last cycle. So, I'm speaking for Troy here because personally I don't give a shit. But these shit coins are going to, they're going to see their day, and there's going to be money to be made if you still have that fiat mindset in these alternative coins to profit off of. Let's spin into some news. Again, if you want really good crypto, Bitcoin information, the best social media platform to be on is X, just hands down. There's just no better place. You're seeing, if you follow the right people, and again, you can follow me at Rinaldi_Don at X, at Twitter. Go through my follows. I'm following about 16 or 1700 people, and check out the people that I'm following that are in Bitcoin and crypto and follow them. Fill your news feed with people that are much smarter than me or much smarter than you, and that's where you get your alpha, and that's where you make your best decisions. So we're gonna go through a couple of things, a couple of news feeds, and I'm gonna focus on some things from today, because I mean the news cycle, the X crypto and Bitcoin news cycle literally changes on the day. So there's just new information coming out. Probably since I gathered this a couple of hours ago, there's probably been better information out now. But we'll talk about a couple of these tweets here and what they mean. So the first one I have up here is a really good follow. Holonot80 IQ 13%er tweeted, BlackRock added 12.4K BTC while DGens got liquidated yesterday. So BlackRock itself, just that one entity, and that's one of 9 other ETFs that are adding on a daily basis, added 12.4K BTC just yesterday. And again, a quick reminder, 900 BTC are mined a day. So they basically 14x that, just BlackRock. So this big price run up that we've seen, especially since the ETFs have been approved and trading, has a lot to do with the supply shock. And we are, let me give you an exact, I believe it's 45 days away from the halvening. We still got a month and a half before the supply gets cut in half and we go from 900 coins a day to 450 coins a day. So we're not even really seeing the true supply shock. And the reminder is the real supply shock really isn't going to happen until probably the summer, because when Bitcoin will cut from 900 to 450, that isn't really going to be realized for a couple of months. The miners won't really feel that shock until probably summer. Midsummer will be when we really see it. So meanwhile, these ETF or these BlackRock and Fidelity and these Wall Street players are going to continue to scoop up more and more Bitcoin, taking more and more Bitcoin off the exchanges. Before all this started, the amount on exchanges was somewhere like 1.5 million, and I haven't seen an update. I haven't actually looked to see what the update is, but that is continuing to just evaporate more and more. And the only way that this continues to work is if the price goes up, because the price goes up, it costs more to buy, and then it also entices people that are holding Bitcoin to sell it, because you need sellers. You need sellers in order for BlackRock and Fidelity and all these ETFs to continue to meet the demand, because the demand is definitely there with Wall Street. And the thing about Wall Street players is they don't buy to trade. They don't buy to hold for a couple of months. Like, they buy and they hold. They hold for long periods of time. So this large number of Bitcoin that's being taken off of exchanges isn't going back. So the only way this all works is basic supply and demand economics, and that's price has to go up. And this is what we've been talking about, me and Troy, for a long time. We were talking like this at 19, 18, 17, 15K Bitcoin, and we've ramped up this rhetoric in the recent months, especially when the calendar turned to 2024. And then when we got word that the ETFs were going to be approved, and this is only like everything we said has basically been coming true. So 100K Bitcoin is inevitable. When? We just don't know when. But the fact that Bitcoin is going to reach 100K this cycle is, in my book, a lock. So whatever percentage of that $66,000 coin you can start to accumulate, you're going to be seeing some price action with Bitcoin in the coming months and year for sure. The next tweet that I have is from Rajat Sani. It's Rajat, first name. He's a good follow. He's got about 100K followers on X, and he tweets basically just Bitcoin stuff. He tweeted, Bitcoin went to 69K, back down to 60K, and it's now back around 67K. If you want this asset with 100% annual returns, you need to learn to deal with the volatility that comes along with it. If you don't, your Bitcoin will be taken from you. And what does that mean? Let's break that tweet down. In order to see parabolic runs in any asset, okay, let's divorce Bitcoin from the conversation for a second and just take any asset. We can talk about Amazon stock. We can talk about Apple stock. We can talk about Nvidia stock. Any of these stocks that have made major movements in the past decade. In order for that price action to go parabolic into 2, 3, 4, 5, 6, 7, 8, 9, 10x, you have to have dips along the way because healthy markets have sellers, right? It's called going from the weak hands to the strong hands. The strong hands are the people that buy assets for long periods of time and don't sell them. The weak hands are people that don't know how to invest correctly. They're traders, or they're trying to hold something, make a quick buck. They time it incorrectly. They get spooked, they panic, and they sell. So it goes from the weak to the strong. In order for that to happen, you have to see volatility. So you see price action going up and down. You might see price move like 70%, and then you'll see a drop of like 30. Then you'll see the run up continue to 100. You'll see a drop of 25. Then you'll see a 2x, 200%. So you see that volatility. And for people who, you go to your advisor and your advisor is like, oh, we're going to set you up with this account. It's going to get you like 4 or 5%, or you put your money in the market, you get 8% annualized over 30 years and it's nice and comfortable, or you have some sort of fixed annuity and you're just like all these really safe investments. And then you hear about like insane volatility where the price is just jumping in like days, 80%, and then all of a sudden you lose 30% of your portfolio. That's not something that a lot of investors are used to. Unless you're in blue chip stocks and you've invested in blue chip stocks in the past, or you're a blue chip stock investor on the early days of that, like you were in Yahoo early, or like I said, Nvidia, or you had Tesla stock, or any of these stocks that have made insane price action movements. If you're not investing in assets that have had volatility, this is all brand new to you. So it all just kind of supports the thesis that people have that, Bitcoin's this pet rock, or Bitcoin's this, what does Bitcoin do? Or Bitcoin's not providing any value. It reinforces people who are not able to acquire this asset at lower prices to make themselves feel better about the fact that they don't own it now and make tons and tons of excuses of why they don't enter now. And that's really all that you're seeing. You're seeing a lot of people. You're seeing both sides. You're seeing people on Twitter and social media talk about, how excited they are about cryptocurrency and Bitcoin's price movements. And those are the people that have probably been invested for a little bit or are investing and learning and excited about it. But then you see a lot of people that hate on it and shit on it. And the people that hate on it and shit on it are one of two people. They've either not done the research. There's some people that are smart investors in other sectors. They're not necessarily dumb people. They just haven't done the research. They haven't taken the time to study Bitcoin to get it. There's those people. Then there's the other people who just aren't smart enough or want to take the time to put the time forth to do so and learn and invest and see how the thing works. So those are the two types of people that you see that are talking negative, especially in this phase, because we've definitely, we've been talking for a while. Are we in the bull market? Are we in the bear market? We're definitely 100% bull. Like, we hit the all-time high. Yes, we went down a little bit, but we are trading comfortably in the 60,000s right now. This asset 16 months ago was in the teens. So we are unequivocally in a bull market. So you're going to see a lot of people have polarizing viewpoints when it comes to Bitcoin specifically. People that are stubborn and feel a certain way about not being involved or not getting in early or not listening to people like me or people like Troy or others in the space that have been trying to educate people. Like, they're feeling some type of way, and they will project that on other people. And unfortunately, people that want to learn or have the ability to learn will listen to some of these jackasses and lose out on a generational opportunity. And I believe wholeheartedly that the generational opportunity still exists. And I know that's tough for people to stomach, especially last week when we're sitting here in this podcast. I think last week when we were in the 50s last week, right, Rich? I believe somewhere in the 50s. And we were talking about how that represents basically a family of four household income for a year. And like, now we're even way past that. Like, we're talking about numbers that are far exceeding the median income in this country. So plopping down 66,000 or 67,000 and buying one coin is not feasible for a large sector of the American public. And I'm sure if anybody's watching this internationally, many other countries as well, even worse off than we are here in America. So I get it. I understand. But like, if you listen to enough of the smart people in this space, like, they're not talking about it stopping here. Like, this isn't the stop. 69K is not the stop. The same way that 20K wasn't the stop last cycle. In the same way that, like, 1100 wasn't the stop the cycle before that. Like, this is an asset that will continue to trend in the opposite direction of the United States dollar and any fiat assets that are tied or pegged to that dollar. Dollar printing cannot and will not stop. As long as dollar printing cannot and will not stop, dollars will flood the economy. The M2 money supply will continue to expand. When the M2 money supply continues to expand, goods and services will continue to cost more. When goods and services continue to cost more, good assets will expand in value. Fine art will continue to go up. Real estate will continue to go up. Blue chip asset like stocks, Nvidia, Tesla, those will continue to trend up. And the greatest, best asset ever created with a finite supply, Bitcoin, will continue to trend in the opposite direction of everything that I've already mentioned. It's just a mathematical fact. It's math. It's not emotions. It's not polarizing. It's just math. Bitcoin is math. If you read the white paper and you take the time to study what Bitcoin represents, what the monetary system that Bitcoin was made to be an opt-out to, you will understand that it just works. It just is. Owning some is always better than owning none. And I'll share really quickly. I have a 12-year-old son, and those of you that follow me on X or follow me on Bitcoin might have seen, because I posted about it. But Saturday night, my son actually asked me, and again, I've never been the type of father that forces my son to play any specific sport. If he asks me to do it, we do it. I don't force him to do anything. So, like, he's been here since my son was born in 2011. So he was talking in 2000, late 12, 13. So for most of my son's, like, listening lifetime, he's heard Bitcoin. He knows it. Like, we used to have a Google, not the Amazon Alexa, but the Google, with the whole Google Home, I believe, the Google Nest. We had the Google Nest in our house in like 2016, and literally I would walk in the house with the kids and I would ask, what's the price of Bitcoin, every single day, to the point where sometimes I wouldn't do it. My son or my daughter would walk in the house and they would say, what's the price of Bitcoin? Because it's just what we did. So he's heard Bitcoin for a long time. Finally, on Saturday night, my son came up to me and said, hey, Dad, can we get some Bitcoin? I want to get some Bitcoin. So I set him up with a self-custody wallet. I had him write down. I actually did it for him because his handwriting isn't the greatest. So I made sure it was nice and good. But I wrote down his seed phrase, and I showed him how to protect it. And I sent him what equated to about $40 worth of Bitcoin. At the time, it was like 70 or 80,000 Satoshis. And he sat there and watched, because it was two separate transactions. and he watched the coins come into the wallet, and then he sat there and just like kind of watched the price moving, and we had a conversation about it. And then it also opened up the conversation of if something happens to me, how he can access my coins with my 12 seed phrase and take ownership of my coins, and me knowing that that extra layer of security for me to sleep well at night, that my son knows how to access my Bitcoin and acquire it with my keys and put it into his self custody wallet and do what I want to do, which is carry on the lineage of my last name with my Bitcoin and pass it on to my children. So that was a really big moment for me, and my son coming up to me and asking me. And since that day on Saturday, we've had a lot of price action. He's like been texting me, "Hey, Dad, the price is moving, and it went up or it went down," and he's looking and
I like
seeing.
that you did. This wasn't forced.
Yeah,
It wasn't like, all right, son, it's time to sit down and talk about the birds and the Bitcoin. You know, you kind of, he's just kind of been, it's been part of a family culture, so to speak, and now it's kind of like he's got his own level of interest in it, and he may next week there might be a new Xbox game
yeah,
or
of
something,
course, of
move
course.
on. But no, I think that's kind of cool. And that at the very least, like he's gonna be aware of this concept of wealth, of what wealth is, being rich versus
Yep,
wealth.
I'm
And
I'm blessed
I think
because
that's pretty cool.
very early on, and the thing I have indoctrinated in my son is just the fact that school, and this is, it's crazy how this worked out. I don't recommend this at home to other parents, but it worked for me. My son, it's been drilled in his head since he was young that like school's a scam. 95% of what you learn you're never going to need, but what you do need to do is you need to learn how to manipulate that system in your advantage and play the game and show them that you know how to learn things, because that's all it's really about.
Yep.
Don't focus on if you know it, just focus on can you memorize it, right? So I'm lucky my son's in a high honor roll, and my son excels because really early I taught him math based on value. We had value conversations. It wasn't 2 plus 2 equals 4. It was something is worth 2, something else is worth 2, and now you have four of value, right? We had value conversations. It wasn't just the worthless 2 plus 2 equals 4, yeah, so
Well,
what?
they've always, I mean, I always try to make sure that when you taught things like math, that there has to be some level of why you need to know. And it's just a level of, like, and I would do the same thing. Like, I have 2 lightsabers and, 2 more lightsabers as opposed to just 2 and 2. And we're simplistic. We're obviously doing a simplistic thing, but understanding why. But I was the same way with my kids, making sure they understand. It wasn't about passing this test. It was about understanding how to pass tests, because you have to pass a certain number of tests to get to the stuff that you want, to get the job, to get whatever it is you want to do, whether it's because you want to make a salary or because you want to have that quality of life. You have to know how to play all these games. You got to know the rules so you succeed in the game, whether it's soccer or classroom. You have to know, and I think that's what getting to college is. You go to high school and then you finish high school, and now you're right. All right, you kind of graduated from that game. Now there's a new game, and you have to learn the rules for that game. And once you learn how to be successful in that game, and I think if we're teaching them how to play those games, then then they make the decisions on what they're going to do with their finances, they'll know how to play those games because they played other games.
Yeah.
Their ability to play other games will lead to them being successful playing this new game.
Yeah. Yeah, in like I said, he's in 7th grade and he's in 8th grade math, and he's actually doing well. He's got his grades are in the 90s. So I got lucky. I it was a risk that I took by indoctrinating him so early into the fact of just understanding that, like, you're gonna go to this school. There's gonna be a lot of pressure, but it's like you don't really need to have pressure. Just learn how to play the game and play it effectively and win. That's it. Like, don't worry about the things that you don't truly understand. Just figure out how to memorize it and just get to the next level. It's like a game.
I don't think you're giving. Believe me, teaching all those years, you're giving it. I wouldn't call it pressure. You didn't put pressure on them. You put expectations on them.
Yeah.
Where people put pressure on their kids, as opposed to expectations. Like, our expectations that you try your best, you do well, because this will do well for you later, as opposed to you will. The pressure is you will do well and you will get into a really expensive college that you don't need to go to, and
Yeah,
all those kinds of things. So no, I think what your approach is right.
yeah. And regrettably, there's not a lot of Bitcoin or crypto conversations happening in school because I ask them all the time. I'm like, I told both,
There's not enough
I
conversations
told
about
my,
finance
yeah, I
in
told my
schools.
son and my daughter, I said, there's going to come a day, and hopefully it's before you guys graduate. Maybe this cycle, maybe it's next cycle, maybe it'll be my daughter instead of my son. There's going to be a day that comes where the teachers are going to talk about it, and it's going to be a thing, and it's going to have to be told.
It's probably
And
not to
there's
maybe 12th
probably
grade if they take
and there's
economics
probably
or
going to be
something.
nobody there that really understands it.
Yeah.
And there's an open door policy for me to, if they need somebody to come in and explain how this works and what it's all about, like, tell them Dad knows how to do it. And I'd be more than happy to come into the school and have a conversation with the teachers to educate them, or just to come in on like a career day and be like, yo, this is what time it is, and this is what's going on, and this is where the world's at, and break down you know
Right.
how it works. And I'm disappointed that there's not even like, you'll see like worksheets where it'll just mention little things like pop culture things.
Right.
I've seen nothing, not one thing yet, and it's like, I shouldn't be surprised because I have such a low expectation with the school systems that it's just not, it really isn't surprising.
Well,
So
again, because one of the things that we're learning that that you're learning is that big corporations run everything. They, including public education, because they're teaching in most of this country what's in the books that are coming from very few textbook companies that are produced for certain states. So Pearson was a big name. McGraw-Hill. Like it's no different. If we had a conversation about what's wrong with the media, it's the same conversation what's wrong with education.
True.
There's large corporations and there's not a lot of them, and there used to be a lot of them, but those larger corporations, and this could be anything. We could be talking about anything in our country, in the world. There used to be a whole bunch of companies. Now there's less, and so those less amount of companies control everything. So they can control the narrative, whether it's pop culture, whether it's music, whether it's clothing, whether it's education and what's in the curriculum. It's all coming from these large corporations, which are saying these are the things that we should be learning. And it spills across multiple states because they're writing textbooks for the larger states, California, Texas, etc., and those tend to spill over into all the other states.
And then you go to, hey, what's up, Troy? He's
there. Oh, he's coming.
What's up? What's going on, Troy? We wish you could be here too.
I miss you, man.
Then you go to higher education, right? And you're indoctrinated with one set of ideals. Okay, so I'm not going to get political. That's not where this conversation is going. I don't think there should be one set of ideals, whether it be liberal or conservative. You should be getting a mix. There should not just be one side controlling the narrative for the entire industry, right? I mean, people will say it's liberal. Well, if it was conservative doing it, I would say the same thing. Like, you should get options, right? There should never just be, you're getting this through one set of lens. And it doesn't matter what your viewpoint is when it comes to politics. You should be able to choose that, right? It shouldn't matter what I think. It should matter what, here is the information, I'm going to present it. You make a decision on how you feel about it, right? The same thing with religion. Like, it doesn't matter what religion you have or if you're atheist. Like, it's irrelevant. Here's the information. Here's everything. You do what you may with it and come up with some sort of thesis with that. And it shouldn't be you shouldn't have to think like I think. Like, this is what I think and why I think it. And then you gather information and come up with your own.
Oh,
and
definitely.
I feel like it's dangerous.
And that may be
super dangerous.
It'd be kind of funny because I think your son may come back to you and when he's 25 and he's like, yeah, you and your old school Bitcoin, Dad.
Yeah.
I got a new thing I'm following.
Sure.
And he's going to make his own financial decisions. And I think you'll be impressed if he's done his own research and he makes his own decisions. Like you mentioned religion. Like, my kids, I let them, when they were younger, I had expectations that they would go to church and go to confirmation and all that stuff that us good Italians have to do. And then once they became adult in the eyes of the church, I allowed them to make their own decisions. because they were adults in the church. They're allowed to make their own decisions. Otherwise, I'm a hypocrite. Like, become an adult. Okay, you're an adult. Okay, now once you're an adult, you make your own decisions within reason, obviously. If you're going to live under my house,
it should never be. You're
rules.
allowed to think however you want, except if it's this way.
Right, yeah. You can have, like, it's like an Italian household. You can marry anyone you want as long as she's Italian and Catholic.
It's like you can vote for whoever you want to vote for, except for that guy.
Except for that
and there's
guy,
only two options.
So you and I have a similar family structures.
Yeah.
So we kind of know that, but that's a lot of families, and we're hypocrites. And I think and I know this, let's get back to finance. Like, and again, I don't own any Bitcoin, but I respect the discipline that you're learning. And I could say, you guys are, and you're going to be able to nail me with facts. And I have to respect that, because you guys can both, our missing partner, can nail me with why I'm wrong. And I'm just basing it on something I read or I heard from my dad. And, or I watched on, CNBC Business or something. No. So I think I think you're right. I think I got to go back to one of the first things you said. So it hit 69.
Yes.
And then it went right back down. Was that because people had put in
sell orders,
automatic sell orders, so that's why it couldn't stay at 69.
Yeah. So
because of the way people do their transactions.
I wish
nowadays.
Troy was here, because he could definitely break this down better than me, because I don't trade. I'm not a trader, but what my limited understanding of how all that works is, you can put orders in, right, or you can see order books, so you can see where there's a lot of sell orders at, and traders could see that there were a lot of sells set at 69K. So if the price hits 69K, it's an automatic sell. Like, they're not going in and pushing sell themselves. It's just automatically price hit 69.
It's built into the system.
Yeah. So there was a lot of that. So instantly all those sell orders hit, and then the price, when sell pressure comes in, the price comes down.
I think most of them think it's like a movie where they're all in the trader and they run and they all run into like a booth like it's 1970 or something.
But the good news about that is that now we cleared out that all those order books. So now the next time we approach 69.
Oh, interesting.
So what happens to happen is resistance turns into support, because we didn't, it was resistance because there was sell orders there. You clear out the sell orders, it goes down. So the next time it goes up, there's no sell orders there for it to stop. It can continue to ascend.
So theoretically, someone has sell orders at 85.
There's the next one for me, I think, is probably 100. Like, what we saw at 69, we'll probably see at 100.
Interesting.
Only it'll probably be
because it's
like
just this arbitrary number that people decide is what they're
psychological.
And
it could be it's 70. I don't know. Maybe it's 80, 90. Like, there's certain psychological numbers.
We got to get to that 3 digits or whatever it is.
But definitely for sure, 100. There's definitely sell orders at 100. You'll see it. You'll see it past 100, and probably I would not be surprised if we go from 100 to like 85 in like a minute, which will be just like,
I'm just waiting
crazy
to see when more and more people really start to get on board that this is the thing, whether it's Ethereum or whatever.
They slowly are. And especially since Wall Street has exposure now, people own it that don't even people are going to start owning it and not even realizing they own it, because those ETFs are going to be started baskets of index funds that corporations and businesses, and maybe even Fidelity is allocating 1% of one of their main portfolios of ETFs, has it in there now. So if you're a business that has exposure to that ETF, you're going to own Bitcoin and not even know that you own it. But the thing is, like, if you get to a conversation with a true Bitcoiner, like, to truly own Bitcoin, you have to self-custody it and have the private keys. Right. When you own an ETF, you just own a paper contract of that. That's a whole nother conversation. We could have a long-winded debate on what that is, or if that's good or bad, but to get mass adoption.
I think there's so many unanswered questions, and I know I started to read that book that you've been flipping through it.
Yep.
And those are some of the questions that
Shout out to Anthony
a lot of the lay people that don't like. Well, you were talking about your son's pass and all that stuff, and then you got a question of I'm thinking of the line from the Shawshank Redemption, when he's on the roof and he's like, "Do you trust your wife?" and he's going to throw him off. And he's like, well, no, he's trying to get him to understand that if you put it in your wife's name,
Yeah.
Like these tricks that
Yeah.
people have to do,
Yeah.
knowing the system, knowing how to beat the system. And I know this is different, obviously, like having the passcodes and all that stuff. Like, and I'm worried, like I lose my car keys on a regular basis. Like it's funny to me. I think a lot of us have that weird. I think is that why some people, because you have to have this kind of like.
Well, you don't.
Is that
You
what I
don't
mean? You
have
do.
to.
You don't have to.
You
But
don't
you
have
need
to.
to.
You should to be
So
sovereign.
you don't get robbed, so to speak.
To be sovereign. To truly realize the entirety of why Bitcoin was created, you should own your private keys to get the full like Bitcoin experience.
Right.
You know, libertarian, opt out of the system, all that stuff. You should own your private keys. If you are starting out in Bitcoin, if this is your first year, if this is your first cycle, it's not as important. I might get some slack from Bitcoin maxis saying that, but I think there's more and more Bitcoin maxis that will agree with me that it's more important to just get the exposure, feel how it works, see how it works, be exposed to the market, and then along the way,
Well, that goes
learn.
right back to your catch line. Trust but verify.
Yeah, don't
Like
trust verify.
Like, don't take my word for it. We're
Yeah.
telling you should do it. So ease your way into the pool. Like, especially with ETFs, like you got a chance to maybe like a way to really kind of see if you like this. And most of us are not all in. Like we're doing other things, whether we should or shouldn't be. We aren't paying attention as much, and we trust other people.
You just reminded me of something when you said that. I had a conversation with somebody on Facebook this week. He tagged me in something, and it was about vanishing, like Bitcoin vanishing. And this is a good conversation to have for people to understand what Bitcoin is, where it exists, how it exists. You don't actually, when you have a wallet and you have Bitcoin in your wallet, you don't actually have Bitcoin in your wallet. What you have is you have ownership over the piece of the blockchain where the Bitcoin exists. The Bitcoin is always on the blockchain. Okay, think about that. Think about a big chain, and there's Bitcoin just along this chain, and you have ownership over the piece of that. And the wallet that you have the keys in gives you cryptographic ownership of that piece of the blockchain. So the Bitcoin never vanishes. The Bitcoin never gets stolen. It's the ownership that gets stolen.
Has access to that piece of the chain.
It's like, let's say you own a house and somebody steals the title of your house. The house nobody doesn't pick up the house and leave with the house.
There, right.
The house is there. It's the ownership of the house that changes, right? Even when you sell the house, it doesn't have to be stolen. When you sell the house, right? When I sell my house to another buyer, the house is never moving from the spot that it's at. The ownership value transfers.
Right.
Right? So, same thing. Same thing. So you have ownership.
That's a really good analogy.
You have ownership of the piece of Bitcoin that resides on the blockchain. And that's why getting the private keys is important, because then you actually own that piece. When you let Coinbase hold it, when you let Gemini hold it, when you let BlackRock hold it, they have the piece and they give you the paper contract USD value of that piece of the blockchain. So you never truly own that Bitcoin.
And the government has no access to it.
If they actually have access to Bitcoin now, because they have Silk Road coins that they're supposed to be auctioning off, that they confiscated.
But not what I mean is they have access to what they can access.
Yeah.
What they have ownership.
The only ownership they can have is private keys that they have to that Bitcoin.
They can't come and take it.
No. Mm-mm. No. All right, let's go to our next. This kind of goes into what I was talking about, this next tweet. The Bitcoin therapist, the BTC therapist, good follow on X. Michael Saylor is about to smash by 10,600 Bitcoin for 700 million. If we add this to MicroStrategy's current holdings at 193,000, we're looking at a grand total of 203,600 Bitcoin. For Saylor to get to 1% of the entire supply of Bitcoin, he only needs 6,400 more coins, or $422 million of USD value. So he is rapidly approaching 1% ownership
Yeah, Troy
of the
does have a
blockchain. So
question
Troy's
for
got a question. Troy, Troy says, I have a feeling the U.S. government will come out and say they have been buying BTC this whole time. I think the United States government is one of the most inept organizations on the planet. I think there's a lot of jackasses that are shot calling, and I would be absolutely shocked if that was true.
But
As
there
I
are
think,
definitely some players within the government that we know did it.
I think that
Some
these,
insider traders, senators that we like to talk about that might own some of it.
I think that they are, I think that they're just idiots when it comes to anything. I mean, they can't even balance the budget. Like, I actually think that they were supposed to have dumped those Silk Road coins onto the market, but the smartest thing that they've done is not sell those coins and not auction them off. So they're holding those, and there's close to, I don't know the exact number, between 150 to 200,000 coins. Let me see if I can look it up real quick because I'm actually curious. $200K. They still have $200K, and the United States government right now is one of the largest holders of Bitcoin with close to 200,000 coins seized from the Silk Road. So they seized that years ago, and they're still holding. So, I guess the U.S. government's got diamond hands. I don't think they're adding to it, but it wouldn't be a bad idea if they added it to the balance sheet and just held it, because it's I can't believe they haven't sold it. It is kind of crazy. But back to Michael Saylor, he is he already, if you take into account all the missing coins, he's already over one. He's probably approaching 2% of the entire supply if you take into consideration the 3 to 5 million coins that are potentially lost. So he just MicroStrategy is going to go down in history as one of the most valuable publicly traded companies in history. It's just amazing the amount of balls it took for Michael Saylor to invest the company's balance. I mean, basically, he put the company at risk. Like, he didn't, because we know Bitcoin's going to work, but in the eyes of everybody else, he put his company at risk by putting all the money on their balance sheet into Bitcoin. Because if Bitcoin goes down to zero, like, the company goes to zero. So it's like it's a risk. It's not a zero sum. I mean, there's definitely risk. So it's going down as one of the smartest decisions. Speaking of government or state entities adding Bitcoin to their balance sheet, Bitcoin Magazine tweeted today, this morning, Arizona State Senate is considering adding Bitcoin ETFs to its state retirement portfolios. And then they tweeted a copy of the Arizona State Senate doctrine that was crafted to be passed in order to add those ETFs to retirement portfolios. So if that comes to pass, that means any state employee working for the state of Arizona will have exposure to Bitcoin through their retirement fund. And that's just the beginning. That's the floodgates opening. Stuff like that is going to start definitely happening. And again, when you start having state actors, whether it be actual states in the United States of America, or you have governments adding Bitcoin to their wealth funds or to their balance sheet, the price just continues to just go in the opposite direction.
Legitimacy.
USD.
That,
Yeah.
that it is recognized as something, that it's a real thing. And that just really takes away some of those discussions that I see that you get a lot of, like, these newfangled things. So I think that's cool. I mean, that just helps that's going to help you get to 100 a lot quicker.
Yep. I got another tweet here. This guy's a 22-year-old kid, and he's probably got, I think, like 500,000 followers on X. His name is Dylan LeClaire. He is just dynamite when it comes to Bitcoin information. This is a rather long tweet, but it's powerful. So I'm gonna read through it. Hopefully I don't bore people with my reading skills, but it's worth sharing. So I'm going to read. General Bitcoin market outlook update. Supply distribution has started. Here's what I'm looking at and how it compares to previous cycles and what might come next. First off, the biggest story is obviously the ETFs. IBIT, which is BlackRock's ETF, has been the most successful ETF launch in history by a wide variety of metrics. And just looking at BlackRock plus Fidelity alone, they've bought 284,000 Bitcoin since launch, greater than 1% of the total Bitcoin supply that will ever exist. On a net basis, including GPTC outflows, ETFs have hovered up 160K Bitcoin since launch in early January. Just massive numbers. Demand has surpassed most all initial expectations with increasing strength into the rally. 788 million of inflows from IBIT alone yesterday amidst a negative 8% close from all-time highs. While the Bitcoin market has boomed post-ETFs, nothing exists in a vacuum. For those who have been following since before the ETF, it was clear the groundwork for this rally was laid over the past couple of years of bear market purgatory. Various on-chain HODL metrics clearly showed all-time levels of supply constraint. From the most simple to understand, i.e. percentage of supply last moved in N plus years, most all hitting all-time highs, or more advanced quantifications of HODL strength using the UTXO set, which I talked about last week, despite the plus 100% bounce from 2022 lows. Net accumulation was ongoing for much of 2023. However, as is tradition with the ever-cyclical Bitcoin market, with the rise to new heights comes a distribution of coins to new entrants from the old guard. This can clearly be seen by the change in long-term holders over the recent months. For those interested in a deeper dive on the quantifications of LTHs, you can take a deeper dive here, and he puts a Glassnode, which is a really good site to look at on-chain metrics. He puts it in this tweet. However, at this stage, I'd say it's far from worrisome, nor by any means a red alert for bulls. New distribution on a 30-day change basis began to occur at 1K in 2017 and 13K in 2020 during the run-up to new highs, and started in early January this time around. Here's a visual of the distribution that has begun to occur. Below displays the drawdown in supply held by long-term holders from its local to peak as a percent of circulating supply. Just the start, and likely to increase as new highs are set if current rally is sustained. A clear takeaway should be just how strong distribution become during a raging bull market when price is still going parabolic. As new forms of demand unlock from new classes of investors that realize Bitcoin did not indeed die during the previous bear market, while fundamentals such as liquidity and adoption have improved, unlocked supply can be overwhelmed by newfound demand for quite a while. A local peak is reached once an increasing overhang of supply exceeds newfound demand at exceedingly high prices. The exchange rate crashes, and we repeat the whole cycle of accumulation all over again. In terms of catalysts on the horizon I am watching, there are a few obvious ones. First, it's still the early innings of ETF allocations. These passive flows from the world's largest financial institutions will occur and are likely to grow given the immediate success of these products. Here are some of my thoughts from back in November on the impact of ETFs. All still hold true today, and admittedly, my initial expectations have been far surpassed. Crazy bullish, and he also puts that in the tweet, that article from November. Portfolio managers and financial advisors have zero excuse to ignore the best performing asset in absolute and risk-adjusted returns after the BlackRock stamp of approval and subsequent ETF rollout. You especially can't afford to ignore it when your direct industry competitors aren't. IBIT is currently plus 25% above its average volume weighted price. There will be chasing. Secondly, the FASB accounting rule change has massive implications that has not begun to be priced in or felt by the market. Post 2020, it was only MSTR, SQ, Tesla, Coinbase, and some miners with BTC exposure in public markets, which were treated as intangible assets. It's only a matter of time until CFOs everywhere, with improved accounting standards for Bitcoin, begin to wake up. Michael Saylor's MicroStrategy raised another $700 million this morning at 0.625 in the convertible debt market. This is on top of already tapping the corporate debt market with a 0% convert and 6% junk offering previously. You could have laughed and dismissed it all you wish during the mania of 2021. Laugh they did. Yet MicroStrategy is up 933% from the point they adopted a Bitcoin standard on their balance sheets. And every single debt instrument issued and equity sale facility utilized to buy BTC is in the money. There will be copycats. While maybe not as all in as Saylor's MicroStrategy, but there most definitely will be copycats. Capital markets are still mispricing this transition. Corporate speculation attacks and share dilutions to acquire BTC will occur with increasing levels of frequency and size. This is not going away. The playbook has been vindicated. After a decade plus of ZERP finance buybacks that decapitalized corporate balance sheets and created a zombified public sector, the pendulum is going to swing back. BTC is the new stock buyback. Most companies just haven't figured it out yet. Lastly, Russia being kicked from SWIFT sent a clear signal to anyone not under the umbrella of the USD hegemony. Multiple sovereigns are currently mining Bitcoin. Multiple are likely accumulating in secret currently as well. Bitcoin is running it back on a global stage, but this time around with pipes built directly into the heart of traditional finance. In summary, yes, incumbent hodlers have begun to slightly distribute, but they are currently being met with an insatiable wall of money. It's going to be a wild ride ahead. Finally, if you find any of this interesting or valuable, consider sharing. And again, this is Dylan LeClaire, a 22-year-old Bitcoin maximalist who probably knows more about Bitcoin than even me, hitting the nail on the head. Basically, the TLDR of that is that you have a player like MicroStrategy, a publicly traded stock, who had its CEO go all in with the company balance sheet. When I say balance sheet, that means cash on hand. So companies that are publicly traded, they have cash on hand that they can either redistribute stock, buy back stock to make the stock price go up, or buy other assets to make the company value go up. That's what you do with your balance sheet money. Instead of buying back stock to make the stock price go up or buying other assets to make MicroStrategy be worth valuable, he said, F all that. I'm going all in on Bitcoin because Bitcoin is the greatest asset ever created. And since he went all in on Bitcoin, the value of the company that he founded 25 years ago is up 933%. He went all in, and his company is 10x'd as a result. So when you have other CEOs looking around trying to figure out how to beat the market, and I talked about this before, you know you're going to hear a lot of things about how the stock market's at all-time highs, the Dow's performing great, S&P 500, NASDAQ. When you peel back the layers, okay, in the S&P 500 last year, it was at an all-time high. 8 stocks were in the black. 8 stocks overperformed, which caused the S&P 500 index to perform. So if you did not own those 8 stocks, your portfolio did not perform. You needed to have exposure to those specific stocks with all the other shit stocks that you had to get that exposure. So you're going to have these other companies. And again, MicroStrategy was not one of those blue chip stocks when this started. They were not one of these top. They were not an Apple. They were not a Tesla. They were not an NVIDIA. They were not one of those companies. They were languishing. They were a languishing corporation. Their stock price was something like 70% below its all-time high at the time that he made this decision. You're going to have other CEOs who are going to be backed against the wall saying, it's this or we go belly up, that are going to say, you know what? Saylor went all in on Bitcoin. MicroStrategy is one of the strongest companies on the publicly traded platform. F it. Smash buy Bitcoin. Let's go. Put it on the balance sheet. Whatever we got, whatever dollars we got, flood it into Bitcoin. Let's ride this bitch all the way up. So you're going to see other publicly traded companies making the same extraordinarily smart decision that Michael Saylor made. Maybe not to the scale where he's out doing interviews left and right talking the Bitcoin gospel, but they don't have to do that. All they have to do is do the smart, sound thing for their shareholders and put Bitcoin on the balance sheet to make their shit companies good again. And the second part of that is a bigger conversation that we can have, and it gets slightly political, so I don't want to go too far down that rabbit hole, but I will say that it was a detrimental error by the United States government to sanction Russia, in retrospect, looking back. We thought it was going to have this really bad effect on Russia and their economy, and it had the exact opposite. Russia said, yeah, we can't use dollars. Well, we'll figure out another way. And they teamed up with China and Russia, because you can see it. Again, all this stuff is transparent, public records. They're mining Bitcoin in Russia. Bitcoin's on Russia's balance sheet. Russia doesn't need the United States dollar. So, the United States dollar is the big bad guy on the street, trying to push people around. And some of these other countries that are sick of being pushed around are going to see what's going on with Bitcoin. And if the United States doesn't figure shit out quickly, it's going to get bad. It's not going to get good. Now, we did talk about 15 minutes ago the fact that the United States does have a lot of Bitcoin that they have in their ownership. Hopefully, we get an administration in, and again, not trying to be political, but I will be factual. The current administration is not very crypto friendly. There are agents in this administration or working aligned with the administration that are not very crypto favorable or Bitcoin favorable. We need some smart people that understand this emerging ecosystem in positions of power to, at the very least, leave it alone. They don't have to do anything. They just have to leave it alone to let it flourish for our country and recognize and understand that you can't ban something that's public and transparent, that has no owner and has no ownership. There is no person that you can take hostage to get ownership of the blockchain. You have to actually own a piece of the blockchain, which is distributed around the entire globe. You have to really go after millions, hundreds of millions of people to get all the ownership, which is impossible to do, which is just ingenious within itself, to get that ownership. So, again, obviously I can carry this podcast talking myself because I just talk and ramble. But if you get an opportunity and you're watching this either on the playback or watching this live, Dylan LeClaire, you can dive into that tweet. It was tweeted at 1:12 p.m. today on March 6th. It's got 240,000 impressions. This 22-year-old's got all these eyes on him because he knows what the hell he's talking about. He's a great follow. And if you want to dive into some of the charts that he put into this, as well as the articles of previous things that he said to back up his thesis, great place to dive, great alpha. These are the things that you need to be looking at and studying if you're skeptical or if you're seeking information to solidify a thesis to buy this asset. Personally, for me, if you're going to own Bitcoin, you should understand Bitcoin. If you're buying Bitcoin to make US dollars with Bitcoin, it's not for you. Honestly, it just isn't. If your goal to buy Bitcoin is to buy at X and to sell at Y, and that's all you're doing it for, find something else and do it with that. Because you're going to really feel like shit in 10 years when you realize you used to own it and you could have had it at that price, and you're kicking yourself when you're like, damn, I had the greatest asset ever in the history of mankind and I sold it for that. So if you're not buying it for the right reasons, go buy some shit coin and mess around with that. Don't buy Bitcoin. Bitcoin's not for you. It's just not. And I've had some conversations with people that are very anti-crypto, anti-Bitcoin, and they fall in that stubborn camp because they didn't get it early enough. And there's a great quote, and I'll probably butcher it a little bit, but Satoshi, when he was still around and he was still emailing, he said something to the fact of, if you don't understand Bitcoin, I don't have the time to explain it to you. Good luck. That's kind of where we're at now. We've done a lot. Me and Troy have done a lot the last 16 months to try to help people, and we'll continue to do so if you truly want to learn and you truly want to own Bitcoin. But if you're here to trade Bitcoin, maybe Troy, I don't know if Troy's still watching, maybe Troy's more keen to help you trade. But if you're trying to trade, I'm not the guy to hit up for that. We're not going to have a good conversation. I'm not going to give you fruitful insight into how to trade Bitcoin. If you're looking to buy Bitcoin to make USD value on Bitcoin, I'm not your guy. I'm not your guy. If you're looking to buy Bitcoin because you want to own something for a long time and you want to have ownership of the greatest asset ever created, if you always wish that you owned, real estate in Manhattan, or you wish that you owned a Picasso way back when you could have got it for cheap, or a Rembrandt, or any of those other paintings, or any asset that's got extreme value that you could have gotten cheap, if that appeals to you, If that appeals to you, then we can have a conversation. But if you're just trying to buy Bitcoin at 69,000 to sell it at 100, I'm not the guy for that conversation. We're not gonna really get anywhere with that conversation. Uh, and just in the nick of time, Troy messages in on the chat. I just 10x leveraged long ETH. So if you're looking to leverage some Bitcoin or you're looking to leverage some coins, man, Troy's the guy to help you with that. I'm not. That's not my. Those aren't the streets that I run in. That's not it for me. We can finish. I got one more tweet that I can read to kind of finish things off. This is more macro. It's not. It mentions crypto, but it's a macro thing, and I think it's a good way to end the podcast. And I'm going to end it. And again, this is a polarizing dude. People like him or hate him, so it's. Not, I don't want you to focus so much on who tweeted this, but I think that it's valuable what he's saying. It's an Andrew Tate tweet, and he tweeted it today, this morning, 2:47 a.m. He's in Romania, so it was probably during the day for him, but it was 2:47 Eastern. I'll read this, and this is how we're going to end it. So let's go strong, and I'll read this and leave you with this to digest and take for it what you will. The world is different now. It's nothing like the past. Your pension fund isn't safe. Your job isn't safe, and your dollar is being abused. The risky moves have been proven to be the safest ones. No vaccine, running your own business, no degree, invested heavily into cryptocurrency, living in a foreign country, no insurance, low tax, multiple passports. The men who made these moves are fine. They're richer and more stable than ever before. You're effed because you went the safe route. You played the best moves of the past and attempt to be successful in the present. The world is different now. Only the most competitive will thrive now. You aren't going to have a work-life balance anymore. Your do-nothing job is going to be gone soon, made irrelevant as AI continues to develop and your company struggles to outcompete inflation. Your company is either going to get cut, your company is either going to cut the fat or go under in the next 4 years. Your pension funds you've been paying into aren't safe. They're getting ravaged by inflation as you read this right now. You can't afford a house and are in crippling debt. You were a pussy and you thought you'd be safe. You thought one more vaccine and they leave you alone. You thought Tate is crazy, he works too hard, he takes too many risks. But don't you see now? The world is different. The safe life is not safe anymore. You avoided risk, and here you are in the riskiest position of all. And it's only going to get worse as the time runs out for you to get it through your thick skull. Tate was right. You need to get rich now. You need to be part of your own company, possess monstrous work ethic, and have a pair of balls. And there's only one place that you'll get a genuine education on how to thrive in this modern world. He put something different. I'm going to add my own twist. Don't trust, verify. Own some Bitcoin. See you next week.